Alrighty, folks. So we have a bunch of companies to talk about today that reported earnings. Let's just get right into it. Starting off with Disney, whose stock is up about 7% right now after the bell. And at one point, it was up almost 10% as the stock hit over 122 bucks. So let's dive right into it and talk about what in the world is going on. So Disney, right off the bat, is planning on cutting 7,000 jobs, which is right around $5.5 billion in cost, as the company is starting to, or trying to, restructure, right? They're restructuring, they're moving capital from, I'm assuming, areas of the business that maybe aren't generating as much revenue, profits, things like that, and they're moving this money, hopefully, to reinvest in other areas. The money that they're going to get from cutting all these jobs. And they ended up beating on both EPS and revenue, 99 cents versus the 78-cent estimate on EPS, and revenue came in at $23.51 billion, which beat nicely the $23.37 billion estimate. Pretty solid there. And it looks like total Disney Plus paid subscribers were $161.8 million for Q1, which is actually down 1% quarter over quarter. And it looks like here, if we take a look at Hulu, which you guys, if you didn't know, Disney owns, I believe, I don't know if they own all of Hulu. I don't think they own all of Hulu, but they own a majority of Hulu. I have to go and double check how much they own. But Hulu paid subscribers were up 2% quarter over quarter, as ESPN Plus paid subscribers were up 2%. And if you guys didn't know, they have a bundle. I actually have the bundle of Disney Plus, Hulu, and ESPN Plus all in one, which I think is like $18 a month if I'm not mistaken on that. And it looks like here linear networks revenue was at $7.3 billion versus the $7.3 billion estimated. Direct-to-consumer revenue was at $5.3 billion. It looks like Disney Parks, Experiences, and Products revenue was at $8.7 billion versus the $8.1 billion estimated. So that's good right there. And it looks like here Hulu came a little bit under the estimate here for total subscribers. Same with ESPN Plus, and it looks like I'm actually not seeing the Disney Plus estimate for subscribers for the quarter, but again, Hulu and ESPN Plus, those were slightly under the estimates. And it looks like here Walt Disney CEO Bob Iger announces Avatar experience coming to Disneyland, which it's already in Disney World. If you guys have seen or been to Disney World, I'm sure you've ridden or rode whatever the Avatar ride. Unbelievable ride. Awesome ride. Not better than the Star Wars ride. I'm sure you guys have maybe been there and you've been on the Star Wars ride. I actually was just in Disney this past summer, and I went on the Star Wars ride for the first time in my life. My goodness, guys, and this is coming from somebody that's not even a big Star Wars guy. I'm not, to be honest. I'm not. I've seen the movies, but I'm not the biggest fan. It's not like I'm a diehard fan, but that ride was unbelievable there at Disney. So right off the bat, they beat EPS, beat revenue. I'm not really seeing much on guidance for the next quarter or for full year 23, but the fact that they're cutting jobs, they're restructuring, this is what's moving the stock, and that's the crazy thing. Well, it's not crazy. It makes sense if you think about it. If, jobs are being cut, it sucks for people that are losing their jobs, but for the business itself, the actual business, they are saving money, or not saving money per se, but they're, I guess you can say that they are saving, money, but that money will be reinvested in other areas of the business. And it's restructuring. That's pretty much what it is right here, guys. So, yeah, Disney is a long-term position for me. This is one that I've been buying. Not so much recently, but I did buy in the 90s as it got under $100. I don't think I bought in the 80s, but I did buy in the 90s, and this is one that I've held for a long time. And it's kind of been a dead stock, let's be honest. This stock has not gone anywhere in the past almost 10 years. That's crazy to say, but yeah, actually more like 8 years. August 2015, the stock was at 108, 110. That's pretty much where we are right now. So let's see. Is this going to be a turnaround story? I think it very well could be. And it's one that I'm invested in for the long term, and I'd love to know what you guys think. Let me know your thoughts in the comments down below. So let's take a look at the next stock here, which, mind you guys, I haven't looked at all of these stocks yet. Disney I did look at before the video, but the next one we're going to talk about, I did not. So I could be shocked here at how the price action is looking. So Robinhood ended up reporting, it's actually not moving that much. Pretty good. It's actually up. It looks like Robinhood is up about 50 cents after the bell right now, or about 5%. Not too bad. It closed at $10.50 roughly. Now it's slightly over $11 a share. So let me see here. They ended up doing EPS of negative 19 cents, which missed the negative 14-cent estimate, and sales also missed 380 million versus 397 million. So that's not good. Double miss there for Robinhood. And it says here, co-founders canceled nearly 500 million of their share-based compensation. Ooh, okay. Interesting there. That's pretty interesting. Looks like they lost 166 million on the quarter. Transaction-based revenue at 186 million versus the 203 million estimate. That's not good. So why is the stock going up? This is interesting. Monthly active users at 11.4 million. The analyst estimates were 12.3 million for monthly active users. That's a whole million monthly active users under the estimate. So I'm not too sure exactly why. Oh, wait a second. Oh, they're buying back Sam Bankman shares? That's right, because he owned like 7% of Robinhood, right? So it looks like they're buying back his shares. I guess that's a good sign. Maybe that's got to be the reason. Yeah. Yep, that's got to be the reason, because there was a lot of speculation around Robinhood and Sam Bankman-Fried. Is Robinhood going to be impacted, because of him owning all that? All those shares and him being involved with what he's involved with, right? So I guess now that they're buying back that, those shares, that's a good sign. I'd be happy about that as a Robinhood shareholder, which I'm not a Robinhood shareholder, but if I was, I would be happy about that. So let me see here on the 4-hour chart what's going on. Yeah, it looks like we have an inverse head and shoulders, clear as day. Do you guys see this right here? Let me show you all. Let me get the good old handy dandy oval tool, circle tool, whatever you want to call it. We have the left shoulder, the head right there, and then we have the right shoulder right here as we're clearly breaking out of the moving averages. We're ripping, now it looks like towards, potentially the 11.50 range, maybe $12. This looks like the chart doesn't look that bad, honestly. It's a stock that I would never buy for the long term, and I've said that before on the channel, but I would consider trading it. I would. And you can see right now we have kind of a cup and handle, you could argue as well. And, 1150 is a big resistance. So I'm going to set my alert right at 1150. If we can break out of that point, which is a multi-month point of resistance, this could end up seeing a rip maybe towards 12, the low mid 12s. It's possible based on this chart right here, guys. Oh my God. Excuse me. And of course, I'd love to know your thoughts in the comments down below. And by the way, if you're finding value, hit that like button and make sure to subscribe, which I don't know why you guys are not subscribed, but for some reason, if you're not subscribed, hit that subscribe button. I appreciate you all as always. And let's keep on pushing. MGM also reported today, which just keeps on ripping. I mean, you guys can see I have my little arrow here. Well, kind of a half arrow, and I'm still sticking to that. I'd like to see this pull back to the bottom of this channel, which it looks like it's not doing that now. It's actually up $2 almost after the bell, so we'll see over the coming weeks what happens here. But it looks like MGM Resorts International ended up doing negative $1.53, which missed the negative $1.36 estimated, so that's not good. And it looks like they beat on revenue, $3.6 billion versus $3.35 billion estimated. And it says here current quarter was negatively impacted by a 3-day COVID-related property closure at MGM Cotai. Where the heck is that? I might sound like an idiot right now, but where is that? Cotai, C-O-T-A-I. Where is that? I've never even heard of that place. Oh, it's in Macau. Okay. All right. Yeah, it's in China. That makes sense. Yep. That makes sense. All right. So, yeah, I guess there was a 3-day related, COVID-related shutdown there, and the stock is just, keeps on ripping. So I'm not FOMOing into this, as you guys probably guessed, or you probably would think. I'm going to wait and see if it comes down low 50, not low 50, that's the wrong number. Low 30s, rather, mid to low 30s. That's where I would consider it. 34, 35, maybe $36 here on MGM. So watch out for that. Looks like we also had a Affirm report. Let me pull that up. Is it AFRM? Yeah, AFRM. This went down. Oh, this is rough. 7% on the day. And here after the bell, it is down another 18%. Unfreaking real. So this thing is getting demolished right now, which quite frankly I'm not surprised. And overall in the past 2 days or a day and a half, it's down 23%. That is not good whatsoever. So let's see what they ended up doing, guys. They ended up doing Let me see here. Let's come down a little bit. Negative $1.10 EPS versus the negative 98 cents estimated. So they missed on that, and they missed on sales as well. Looks like they did 399.56 million in sales, which missed the 416 estimate. So double miss for Affirm Holdings. And let's see here. They see Q3 revenue of 360 to 380 million, which is a lot under the 417.9 million estimate. That's not good. And revenue for full year 23, they're looking at 1.47 to 1.55 billion versus the 1.64 billion estimate. That is not good either. So Affirm, not looking good at all. Guidance is awful. They missed EPS revenue. There's no wonder why the stock is, it's obvious. That's why the stock is collapsing. And at this point, it's holding on by a thread right above the 180 SMA, which maybe we get a little short-term bounce off that. But to be honest, guys, any short-term bounce we get on Affirm, I feel like it's going to be shorted or not respected, right? I feel like the bears are going to come in and pound it back down. That's at least my opinion. What do you guys think? Of course, let me know in the comments. So Uber also reported today. They ended up doing 29 cents EPS on a revenue of 8.61 billion versus the 8.48 estimated. So they beat EPS. Actually, I'm not sure if they beat EPS, but I know they beat on revenue. I didn't see an EPS estimate, at least where I was looking. And Q4 gross bookings were 30.7 billion, up 19% year over year, as they see Q1 gross bookings growing 20 to 24% year over year to 31 to 32 billion dollars, guys. Pretty insane. And Q4 monthly active users were 131 million, up 11% year over year. And they did 2.1 billion trips, up 19% year over year. So a lot of these numbers, guys, the comps on Uber, they're looking pretty good. These numbers are looking pretty good year over year. And the stock was soaring today. It got the It closed up 5.5%. At one point, it was at $38, and it closed at 36. So it was up even more in the pre-market. And you guys can clearly see here on the 4-hour, we're completely breaking out of these moving averages, right? Well, we've been above the moving averages, but we're above a multi-month high right here, which is $34, right? That's where we struggled ever since the beginning of August, end of July. Now we broke out of there, and it's one that I'm not chasing like MGM, but if it cools off a bit, maybe we come back down to 34, 33, 32, cool off a bit. This could end up being one that I might consider, on the dip. We shall see. And we also had Under Armour today, which ended up selling off 8.4%. And look at this chart. Even though it sold off, had an awful day today, it looks like we're still holding trend. It looks pretty decent here on the 4-hour chart. And if we pull the live news tab up and see exactly what they ended up doing, where is it here, guys? Looks like they did EPS adjusted of 16 cents. Revenue, 1.6 billion. Looks like they see full year adjusted EPS 52 to 56 billion. They see full year EPS of 71 to 75 cents. All right, that's unadjusted. The first number I said was adjusted. And it looks like they raised their full year EPS outlook, yada, 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 yada. Looks like net revenue or net income was 122 million on the quarter. So this is one that I'm going to be watching to see if we continue the trend. That's simple, right? Are we going to bounce off this 180 SMA at 950, 980, kind of where we are right now? Or is this thing going to fall right through the floor, fall under 950, and, well, at that point, get clobbered down even further? So I'm going to set my alert here, mark as at or below 950, so we can see exactly what that ends up doing from that point. And we have the last stock for the video, guys. By the way, if you haven't gotten your free stocks yet for Moomoo, up to 15 stocks, each up to $2,000. What are you guys waiting for? Use that link down below, or go to stocksurfest.com/Moomoo. You read all the details, get up to 15 stocks, each up to $2,000. And if you want 12 more stocks from Webull, hey, why not? More free money, up to 12 stocks, link down below as well, or go to stocksurfest.com/Webull. Deposit any amount of money, and boom, you get your free stocks. And all those are limited time, of course, and they help out the channel, full disclosure. And now let's continue on with the video. The last stock is good old Dominion Energy, which has not been doing well. This thing was $86 back in August. Now we're hovering under $60, guys. It's down 30% in the past couple of months. That's awful. And the stock went down 3.3% today. They did adjusted EPS of $1.06 versus $1.04, estimated on revenue of $4.91 billion versus $4.21 billion estimated. So they beat EPS on an adjusted basis, and they beat on revenue, and they see Q1 EPS of 97, $1.12 versus the $1.20 estimate. So that's under the estimate. That's not good here. Probably a reason why the stock is falling. And it looks like they declared a quarterly dividend of 66 cents. I'm not sure if they raised that or what, but it looks like they're still paying a 66-cent dividend. Let me see over the past couple of years. Have they been raising it? My guess would be yes. Yeah, it looks like it was 63 cents last year. Now it's 67. So they're creeping the dividend up a little bit. That's pretty good. I'm not sure what the 5-year compounded annual growth rate is for the dividend, but I don't know. Either way, the stock's been destroyed. It looks like we have a descending triangle on this thing. I would be careful with it, honestly. I would be careful with it. I wouldn't be surprised if this thing were to take the lows out. So for that reason, I'm going to set my alert at 57. Mark is at or below, and we'll see where it goes from that point. So what a day today, guys. Overall, I mean, it was an ugly day in the markets. We had SPY go down about 1% on the day. Let's wrap it up here with the overall indexes, guys. We had the Russell down 1.5. NASDAQ had the worst day of them all, down 1.8%. Thanks to Google. Google got destroyed today. And by the way, I made a video earlier talking about Google, AI, Tesla, all that good stuff. Go check it out. I made a video earlier, the one before this. You know, that's a big reason why the NASDAQ got destroyed, right? Dow got, hit 0.6%. VIX was up 5%. The metals were creeping up. Silver up 0.75%. Gold up 0.2%. Not too bad. So it looks like you can make an argument Triple Q wants to come down anywhere between 290 to 300. It might find itself in that range right around here. You can make an argument SPY is looking to come down. Let me see here. Maybe anywhere between. Let's pull SPY's chart up and zoom in a little bit. You can make an argument it could come between 400, 405, 406, 408, anywhere in this ballpark right here. So yeah, be careful, guys. Markets are starting to sell off. It's not a complete break of trend quite yet, but we did see a pretty solid red day today. And of course, I'd love to know your thoughts in the comments. And if you haven't joined the Patreon yet, check it out if you guys want to. It's linked down below. I'm building a Patreon portfolio, which I just bought more stock today. And I bought the first stock yesterday on that Patreon portfolio. And I post charts throughout the day. We have a Discord chat. We go over what I'm doing, my thoughts throughout the day, all that good stuff. If you guys want to be a part of it for as little as $10 a month, check it out down below. Join the Patreon. I'll see you guys in there. I'll see you later. Peace out.